Okay, I think we're going to start. For this week's wake-up call, we have invited Erik Schut. He is co-founder of Enfuro Ventures. And Enfuro Ventures is an organization who invests in young tech companies active in the field of renewable energy. And by doing so, they want to make a contribution to the energy transition. Through his experience, Erik knows how to spot an opportunity, and today he will share his thoughts on why companies should keep making investments in times of crisis and how startups and scale-ups can push this. So Erik, stage is yours.
Okay, thank you. So, well, good afternoon, everybody. So I will be sharing my thoughts on investing during a crisis time. But before doing so, let me give a little bit more background of myself. So as actually told, my name is Erik Schut. Going back to my roots, I actually studied electrical engineering, and then when I started this, my professional career, I started in the IT space as software engineer. And after working a couple of years as software engineer, we started our own company, WoodWing Software, together with some colleagues, as more or less as a spin out from the company we're working for. And we successfully built out WoodWing to a global software company for the content industry, and having sold our software in more than 100 countries all around the globe. In 2013, I stepped out of the daily organization myself, so still being a shareholder, but no longer being part of the daily operation. And there was also a moment when I started to become active as an informal investor, and with Enfuro, I'm doing that together with Ruud, who's my partner in Enfuro. And I always call ourselves organized angel investors, and we purely invest in companies active in the renewable energy space to speed up the energy transition. And so we've been doing that for about 6.5 years now. And actually earlier this year, we did a complete exit of WoodWing. So actually we did that pretty shortly before the Corona crisis really hit the industry. So that's a little bit of my background. Looking at Enfuro, these are some of the companies that we have we have in our portfolio, both the existing companies, and Rijbroek is one of the companies which we successfully exited a couple of years ago. But today we're going to talk about investing during times of crisis. And well, let's start with the bad news, because obviously this is not a great time for raising money. What you will see is that investors were primarily focus will be on existing portfolio companies. First of all, making sure that these companies deal with the crisis in a successful way, and so that basically means that on the one hand, it's on an effort basis. They are fully occupied initially with the portfolio companies, but also from a financial point of view, they want to make sure that they also have enough money to make sure that to keep their portfolios, the portfolio companies afloat. So what you see happening currently is there is less investments being done. The bar has been raised, and also the processes are actually to raise money have increased. And looking at less investments, about over half of all the VCs are currently not doing any investments at all. They're just basically taking a pause at the moment to see what's going to happen before they will re-engage in doing new investments. And also, interesting enough, what you also see on the other side on startups and scale-ups, it's about 40% of those companies who were planning to raise capital, they also actually have delayed their capital raise process. Well, as you can imagine, with these times, well, the bar is higher now. The investors will be much more critical, and the processes are even longer than you would normally expect. And because the future is uncertain, it also basically means that normally, like if you had a good track record and say, okay, this is what we have been doing, this is working, and as a way to convince the investors to invest in your company. Now, actually, that past performance has less value because everybody will ask, well, okay, but do you have proof that this also works well during a time of crisis and in a new normal situation? And which obviously you don't know. For most companies, that's something that is still a little bit unknown, because therefore the crisis and the new situation is still too young. And lastly, the last bad news item is the valuation metrics are down. And initially, you might think, okay, for the whole startup and scale-up scene, it might not matter that much, because it's more a play for the longer term. It's not something with the public stock market where the trades are going to happen every day on a day-to-day basis with a lot of emotion. However, what is happening on the public stock market is actually affecting also in the valuation metrics which are being used by investors. And some investors actually have to use those, have to report to their investors, their limited partners, the valuation of their portfolio. And one of the things that they use there is also the metrics of the public market. So if the stock market goes down, it actually is also affecting the metrics in the VC space. And the other thing, also think about if you do a valuation with a DCF method, the discounted cash flow. If the cash is coming in later because things are being delayed, the cash has less value. So and that's one part of the equation. And also, because the risk is higher, the discount percentages will also go up, which put the valuation under pressure. Fortunately, there's also some good news. If you look globally, and not just globally, but also actually just in the Netherlands, I think it's pretty clear that VCs have more dry powder than ever. And also in the Netherlands, there's quite a lot of VCs who just raised new money, and so there is plenty of money, and there's always funding for great companies. And even in times of crisis, great companies, there will always be attention. Then also the good thing about the crisis is that it could also be a great breeding ground for the next disruptors. And if you look at the last crisis, the financial crisis in 2008, 2009, those were the days when companies like Dropbox, Airbnb, Uber, and Square were born, which now are all companies with high valuations, well over 1 billion. And the good news, if you look from an investment side, the valuation metrics are down. So if you are an investor, this actually it might be a good moment to step in because the valuation metrics are down. So that's why it's a clear both on the bad and the good slide. But this is all pretty generic. But if we go, well, how does it influence a specific company? This actually, I think, is a pretty nice overview. On the axis, it shows how the metrics and the opportunity of your company look like pre-COVID. And it could either be solid, strong, or very strong. Well, obviously, it could also be bad. But if your metrics and your opportunity look bad, well, then you are a bad investment case anyway. So at least the metrics and opportunity need to look solid. And what is metric? That means, well, the growth. How are you growing? How are you retaining your customers? How is your unit economics? And the opportunity, well, how big is the need for your solution? What is the market size? Do you have a great entrepreneurial team? And then, so that's the x-axis, this solid, strong, very strong. And then on the y-axis, you have the impact of COVID, which could be bad. Right? You're seriously being infected. Think travel business, neutral. You've got same or decreased growth, what I think is probably true for a lot of companies, even those sectors which are not directly affected. You might see that your customers might be affected. And then you've got those companies which actually have an accelerated growth due to this crisis. Think about online video sharing companies like Zoom that we're doing now. Well, they clearly are rockets. And before COVID, Zoom was already very strong. Well, now their growth on the accelerator. So that's what they call the rockets. So I think this gives a pretty nice overview. Yeah, how are your chances if you want to raise capital in during these times? So if you looking from the entrepreneurial side, well, first of all, what you have to do, and probably I think you should already have done so, but evaluate your plans in light of COVID-19. What is a realistic growth? Because most likely your growth plan is going to be affected. So what is going to be a realistic growth moving forward? You might even, instead of growth, need to go to survival mode. And I think you should also have an eye open for reasons or opportunities for a pivot. And because it could be that if your initial idea, your initial vision is going to be delayed a lot, well, this might not be the time to execute on your original vision. So you might see, that might be a reason. On the other hand, you might see opportunities for a pivot where you can actually, really use the current situation in your advantage. And then you really need to act decisively and really make decision and move forward. Next, what is really important is increase your runway. Just make sure that hey, you will be able to keep on going as long as possible. Well, there's the government support programs like the Now arrangements and the Call arrangements. Seriously look at cost savings. If business is really bad and no one is buying, well, probably you can save on things like online advertising and as a way to increase your runway. And you might want to explore new revenue streams. Maybe you might be building a service that is going to slowly create the revenue over time, but maybe you can do some interim new revenue streams, maybe to offer some services that might be able to generate revenue quicker. And then make sure that you stand out and be one of those great companies. Like I said before, great companies, there's always money for great companies. So if you stand out, if you are one of those great companies, you are in a much better position. Then depending on where you are in the previous, the chart that I've shown on the previous slide, either if you are like a rocket, a star, or a racer, those are the companies where it should be relatively easy to raise money. So most of the other companies, it's going to be pretty hard. And knowing that valuations will be down, the best way to go about this is do a bridge round with your current investors. And if you don't have current investors aboard yet, well, actually that's you're in a harder position, especially because seed investments are mostly affected by the crisis. So if you look at the drop in investments, the drop in seed investments is the biggest. So there you would really have to go to the 3 F's, the friends, the families, and the fools to raise money. And what you might also want to explore is a venture debt, and also it's also sometimes called the revenue-based financing. And if you, for example, are a SaaS company with recurring revenues, you could pretty easily get like a 4 times MRR as raised that as venture debt, and that basically means you don't have to dilute your company. Obviously, it's not cheap, but it's actually cheaper than diluting your companies. Then, if you are going to approach investors, the best thing to do is approach investors that you already know. And investors would like to meet with people face to face, and those who already know you, that actually have a much better chance. What is also very interesting is actually to go, if you already have investors, ask your investor for introductions to other investors, because that really helps even more than in normal times. Investors are very much also looking to each other, to get the opinion about potential companies to invest in. And what you will see, fundraising will take even more time, and where normally it would take easily 6 months, it will take more time. Looking on the investment side, tips for investors. Well, first of all, focus on your portfolio first. Well, I think most investors will already have done so. You will be exploring the relationship with the founders you already know and other investors. That basically means as an investor, you're not so much interested to you want to learn to know the companies, and you don't want to go overnight with the company. So those founders that you have been in contact already for a while, those are also the most interesting opportunities going forward. And also learning for the portfolio companies from other investments, and we'll proceed with caution. But also realize that that's the statement from Warren Buffett: when others are fearful, it's time to be greedy. And on the other hand, when others are greedy, it's time to be fearful. And I don't think we, as investors in this industry, you should be greedy. But it is a time for opportunity. And then the last bullet, I think, for investors: be fair. Don't abuse the situation to be unfair in the investment terms, because it's a small world, and not only startups are sharing their experience with investors, but also investors are sharing experiences. And I can tell you that most investors don't like investors being bad or unfair to founders. Well, lastly, a few opportunities I see this time. Start or keep the dialogue. So if you already have a dialogue, keep the dialogue going. If you don't have a dialogue yet, start a dialogue, because raising investment will take time. So you really need to start a dialogue, and it's really going to be 6+ months before you get an investment. Then be open and transparent, and that's something I would ask. Well, I would advise both sides, both the founders but also the investors. Be open what you need. Be open how it's going. And how COVID is impacting your business. And also on the other side, for investors, if you're not going to make any investments this year, well, be open about it, and so that also the founders don't have to waste their time. Then be realistic and also empathize with the other side. Try to understand the situation of the other side in things with the discussions about the terms, about the valuations, and like with starting and keeping the dialogue, I would say, well, explore how a potential deal could look like, and really to make sure that when this is under control again, that you hopefully can then at least make a quick, if you're not able to close a deal, let's say during COVID times, then at least make sure that you're progressing, that after this is over, you might be able to have quickly make it a deal. And lastly, be creative with terms. And what I'm thinking here about is the valuation being under pressure. The investors don't have a problem with let's say paying for a valuation if the plans become true. So I know, for example, that current deals that have been happening, that the valuation is actually being determined in the future. Okay, now we have valuation X, but if the plans are being secured in 6 months' time, we retrospective change the valuation of these terms. And by being creative this way and really being thinking from both sides, like I said before, empathizing with the other side, you might be able to come up with some creative deal terms, which otherwise you would not be able to make a deal at all. So that basically concludes my my wake-up call. So now it's time for questions. So please let me know if there's any questions.
Okay, you can share your questions in the chat box. It's open now. You mentioned that it might be difficult now to look long term, and investors might be hesitated to make that investment right now. What would you say to scale-ups and startups, how they should prepare themselves for post-COVID? What can they do to already move forward after this period?
Yeah, so I think what I would advise really is start engaging with the investors now, and make sure that you actually you also use this time to show you how you're dealing with this crisis. Because if you are able to successfully go through this crisis, that shows actually that you are a strong company. And I think it's really good to really use the time to learn, to mutual learn the potential investors and potential investors learning you guys, and also that they can see what kind of progress you're making. And by doing so, then hopefully when let's say when COVID is over, that at that point they'll have immediately appetite to consider a deal with you, and you don't have to start a process only when COVID is over.
Okay. We have two questions. The first one is, in which situations would it be wise to rush or delay product development in order to benefit from the timing?
Yeah, it all depends on the situation, because like if you have enough money, then it's always, of course, due to speed up product development, and so that basically when we are in a post-COVID world, that you are stronger as ever. On the other hand, if you are running out of cash, you might not have the option to keep investing in your product, and so I think it really depends. And so first of all, what you have to ask yourself, well, is the opportunity that you are chasing, how is that affected by COVID eventually? So suppose that we end up in a new the new society with distances and 1.5 meter, with most likely reduced traveling, etc., etc. How much is that impacting your solution? If that's not impacting, well, then of course it makes a lot of sense to use this time, and you might not be able to close new customers, but then use that time to invest it in your product. But again, if you are able to afford it.
Okay. We have another question from Leen de Graaf. He would like to know, other than the COVID crisis, we are also facing a global energy price crisis. Can you elaborate a bit more on the impact you see of this crisis on your portfolio?
Yeah, so the energy, I think if you look at our portfolio, with so I think what you see that the oil price is down. I think it's not really impacting any of our portfolio companies, because I think it's more clear than ever that we need to have the energy transition. Even the oil companies are actually now saying that we need to reduce the emissions, and so I think the energy transition will stay a big opportunity. But obviously also we see in our portfolio company also delays. For example, that project is being delayed, and I think long term COVID is not impacting the energy transition at all in my view.
Okay. There are no other questions, so I think we're going to wrap it up. I would like to thank you for your presentation, for providing this to us, and hopefully see you next time.
Okay.
Okay.
You're welcome.
Thank you very much, and have a good afternoon.
Okay. Bye bye.
Okay. Bye.